Hi friends, I'm Prasanna Kumar, PK sir. So I'm back with another video. Now this time, this video is for CA final students, that to new syllabus, particularly paper 5, which is AMA, that's the old name, Advanced Management Accounting, and the new name is Strategic Cost Management and Performance Evaluation. Now, ever since there has been a change from old syllabus to new syllabus, so many students have been asking me that, sir, what's your opinion, what's your take on the new syllabus? And as you all know, May 2018, it's the first attempt that has happened, and I mean the examination has happened as per new syllabus, and many students, they were not having that mindset to take the risk to write the new syllabus, therefore they've opted for old syllabus. But as you all know, I was telling them since 3 months that you better opt for new syllabus, because everybody knows that you are taking risk because you don't know how the question paper is going to be and things like that. But I was telling them there is a simple concept in finance, that is risk and return relationship. The more the risk that you take, the more the probability of getting return, and that's what has ultimately happened. And as you can see, the new syllabus question paper in May 2018 is relatively easy when compared to the old syllabus. If you compare the length of the question paper also, I think the old syllabus is around 23 pages and the new syllabus is just 12 pages. And some of the questions that were literally asked for 20 marks were very simple, and it's not at all time consuming. And in that way, whoever has opted for new syllabus, I think they would have really enjoyed this particular exam. And this particular video, what I'm gonna do is that I'm not gonna just run through the entire question paper of the new syllabus, that is strategic cost management and performance evaluation, but I'm gonna go with solutions as well. Now, as you all know, the solution hasn't been released by anybody so far for this particular paper, and even our ICA also has not given any such answers. So what I thought was, let me provide some solutions so that it will help few students. And these solutions are totally of my personal opinion. It's based on my own personal presumptions. Of course, the answers are right, but the thing is that maybe the presumptions of ICA may tend to change. So don't take this answer for granted. So what I would like to, this is a kind of disclaimer, because otherwise if you don't give disclaimer, then there will be fingers ready to point at me. So that's the reason I'm just giving you the disclaimer well in advance. But considering the length of this particular examination, because it's a 3-hour exam, and if I want to solve this whole question paper, it's pretty much impossible for me to do that, because otherwise it will be a 3-hour video. So what I've done is that I've divided this analysis of strategic cost management and performance evaluation question paper into 2. So this video, what you are seeing right now, will be part 1 video, where I'll be solving the first 3 questions, and in the part 2 video, which I'll try to upload as early as possible, I'll be solving the remaining questions. So I hope you guys will enjoy this particular video and the effort that I've put. So without wasting any further time, let's start. Right guys, before we get to this particular video, I want you guys to have a copy of May 2018 AMA new syllabus question paper with you, because in the screen that you can see here, I cannot display both the question paper as well as the answer that I'm solving at the same time. Either you can see question paper or you can see the answer while I'm solving. So as a result, what I want you guys to do is that when I'm solving, of course question paper will not be displayed here, but prior to that, of course, I'll read the question. But before that, I mean, once after I've read the question, you cannot see the question paper over here. So you please download your question paper, and then whenever I start solving here, I want you guys to look into that question paper to that respective question at that particular point of time. I hope you guys have got me. Right guys, chalo, let's start. So welcome to PK Sir classes. So this is the question paper guys, as you can see here over in the screen. As you can see, look at the funny things over here. So it's obviously, as you can see here, it's 12 pages. As you can see, it was actually 23 when compared to the old syllabus, so it's literally half. Okay, and as you can see, question 1 is compulsory, and answer any 4 questions out of the remaining 5. So the point here is, if it is old syllabus, it's going to be answer any 5 out of the remaining 6, so 16 marks each, whereas here it is 20 marks each. So 20 marks for the first question, which is compulsory, and 20 marks for the remaining 4. Total comes around 100 marks. Right guys? Okay, chalo, let's we don't have any time, so let's quickly get back to the first question. I mean, let's get into the first question. Okay. One more thing that I would like to tell you is I've already done with 2 batches with respect to the new syllabus. Whoever the students who have attended my particular batch, I take live classes in Hyderabad at Amirpet. So anybody who has attended my session, of course the new session is going to start from June 1st, which is hardly 10 days from now. Anybody who has attended my particular class, they would have easily attempted for 80 marks. That's my gut feeling, because the standard costing question in this particular exam, which is for around 20 marks, and the transfer pricing question, which is again for 20 marks, and the following question, all this I mean from limiting factor or bottleneck, all these 3 questions are straight away from the material which I have given in the class, I mean the workbook. So 60 marks is a cakewalk for all the students. I don't know, provided they should have come to the class regularly and they should have listened to the class, of course. Keeping those points in mind, it's very easy for them. 80 marks is a piece of cake. I think they could have done it within 1.5 hours to 2 hours, if I'm not wrong. That's my personal opinion. Maybe some of you may disagree with me, but that's what I feel honestly. So it's gonna be a piece of cake, but that's what I'm saying. You should come to the class regularly, you should listen to the class, and you should believe in the faculty once you have got to the classes. Only then things like this can happen. So that's it, guys. So let's start with reading for the first question. As you can see here, that's the first question, guys. So let's read it. GL Limited is a multi-product manufacturing concern functioning with 4 divisions. The electric division of the company is producing many electrical products, including electrical switches. This division, functioning at its maximum capacity, sells its switches in the open market at 25 each. The variable cost per switch to the division is 16. The household division, which is another division of GL Limited, functioning at 70% capacity, asked the electrical division to supply 5,000 switches per month at the rate of 18 each to fit in the night lamps produced by it. Okay. The total cost per night lamp is being estimated as detailed below. So you have got components purchased from outside suppliers 50, switch if purchased internally, okay, that should be from the supplying division, which is at 18 rupees. Other variable cost is 40, fixed overheads is 21, and total cost per night lamp is 129. The household division is marketing night lamps at a price of 130 each with a very small margin, and it is doing business in a very competitive environment. Any increase in price made by the division will push out the division from the market. Therefore, the division cannot pay anything more to switches if they are supplied by the electrical division. Very bad. Almost they are earning 1 rupee. Okay, so what else? Further, the manager of the division informed that it is very much essential. The manager of the division informed that it's very much essential to keep on the market share for night lamps by the household division to retain the experienced workers of the division. The company is using return on investment. Okay, this is another important thing. They are measuring the performance of the divisional managers based on this particular method. What is that? Return on investment. There's a lot of background. I cannot explain you that in this particular video, because here I am trying to give you solutions based on a presumption that you have already written the exam, which means you have already listened to the coaching classes, you have already prepared, and you have a good idea about the subject. Only then you can understand the kind of solutions that I am going to explain, because it's going to be to the point. Otherwise, if you are coming for the first time, if there are few people who are listening this particular video and you haven't attended any AMA new syllabus class, that is Scm&Pe, then you might find it a little bit difficult to follow this particular class, because I'm going to explain it in such a way that it's based on a presumption that you've already studied this whole syllabus, that is new syllabus, you've already attended the classes and you've already written the exam. So for you people this will be custom made, but for those people who are especially listening for the first time, maybe you'll not be in a position to understand that well, because for example, if you take this, the company is using return on investment method. If I need to explain you this, then first of all I should explain you that divisions can be treated as cost center, profit center, investment center, revenue centers. Like this, it can be treated in 4 different ways. And in that, if it is treated as an investment center most of the times, then the basis for measuring the division's performance will be return on investment, right? And it can be treated, what do you mean by treating divisions as cost center? What do you mean by treating them as revenue center? What do you mean by treating them as profit center? What do you mean by treating them as investment center? This will at least take 20 minutes for me to explain. So that's not possible. Like that, I can't keep on explaining each and every concept, because then this video will go for 8 hours or 9 hours. That's not going to happen. So that's why I'll go with the presumption that you already have an idea about this, and then I'll go with the solution. Now with respect to the solutions also, I'll explain you how it has to be solved so that it will be helpful for you to analyze further. Right, guys? Okay, chalo. So let's get back to the question. So the company is using return on investment as a scale to measure the divisional performances and also marginal costing approach for decision making. Fantastic. So you are required to, first one, would you recommend the supply of switches to household division by electrical division at a price of 18 each? Substantiate your recommendation with suitable reasons. So here, not just answering whether you should recommend or you will not recommend, you have to substantiate your recommendation with what? Suitable reasons. That's also important. It's for 5 marks. It's like I don't think this question really deserves more than 2 marks, but probably maybe there are 2 reasons why this question is given for 20 marks. If you can see, all those 5, 6, 5, 4, all are pretty more marks when compared to the effort that you put in. Probably there are 2 reasons for that, which I speculate. The first reason is maybe this is the new syllabus question paper and it's the first examination, so you are taking a lot of risk. Maybe I wanted to reward you with more marks. Maybe that's one reason. Maybe it sounds crazy, but that's how I feel. And the second reason, probably it's not about just solving the question with numbers. It should be added up with a lot of out of box thinking, out of box sentences, saying that if this happens then this should be the way, if this happens then that should be the way. Like that, you have to add on something to your existing answer which is really doesn't deserve those or justify those 5 marks. Okay, right. Anyway, let's start. So would you recommend the supply of switches to household division by the electrical division at a price of 18? So which means, would you recommend the supplying division transferring internally to the receiving division at a price of 18? That's the first question. Okay, so let's straight away start solving. Okay, Nana, as you can see here, so we have 2 divisions. One is electrical division and the other one is household division, right? We have 2 divisions over here. Now for your information, I've already solved these things. So here when I'm explaining the video, I cannot use all the calcs and all, so I've already worked out all the solutions. Okay, I've kept it ready so that now it's easy for me to take all the calculations, because it's not a live class and I don't have help from students also, so that they'll calculate the numbers with the help of their calcs. So that's why I've done all the calculations already, and if I start using the calc over here calculator and then trying to put the numbers, then it will take a lot of time. That's why I've already solved it. So based on that, we'll try to go through this. Right, we have 2 divisions. One is electrical, the other one is what? Household. As you can see in the question, electrical division is having maximum capacity, and that is 100%, whereas household division is working only at 70% capacity. And let's look at the selling price. The selling price of electrical division is 25, which is given in the question. Variable cost is 16, then contribution per unit will be 9. Okay. Coming on to household division, it's purchasing 50 rupees, it's spending 50 rupees but for purchasing the components. In addition to that, 18 rupees is internal product purchase cost, which is nothing but IP cost, which is nothing but transfer price. Okay, transfer price. Then 40 rupees is the variable cost and 21 is the fixed cost. So totally the total cost of the receiving division is how much? 129, and it's gonna sell at 130, that is the selling price. So there will be a profit of only what? 1 rupee. That's the basic information, right guys? As you can see in the question, so that's the basic information. So now what we're gonna do, it's pretty simple. If you look at the first question, what did he ask you? Would you recommend the supply of switches to household division by the electrical division at a price of 18? So will I recommend at a price of 18? That is the question, right? Anyway, so let's try to take this. Right, Nana? Right guys, anyway, so let's try to answer that question. Very simple. As you can see, the supply division is already selling all the goods to the outside market at a price of 25. So in those cases, transfer price will be fixed as variable cost plus opportunity cost, which is equal to, as you can see in the question, the variable cost is 16 for the supply division, plus opportunity cost is nothing but selling price. Your selling price is 25 minus the variable cost at which you are selling is 16. So the contribution that you are earning is how much? 9. So this 9 rupees contribution, opportunity cost is nothing but contribution lost. So when you try to go for internal transfer, that is the supply division, then you will lose the external sales, which means you can't sell at 25, you can't even spend 16, which means ultimately you will be losing what? 9 rupees. So the TP will be equals to variable cost plus the opportunity cost, which comes around 25. So anything less than 25, supply division will not accept. Anything greater than 18, based on the question, the receiving division will not accept. So in that case, supply division will not transfer for a price less than 25 and receiving division will not accept anything greater than 18. So as a result, if you look at the first question, yeah. Would you recommend the supply of switches to household division by electrical division at a price of 18? Answer would be no. The reason is very simple, because the household division is already selling all its units to the external market at a price of 25. If at all it has to transfer any unit to the internal receiving division, then it has to lose 9 rupees and then it has to transfer, which means total cost for it will be 25. It cannot transfer at 18, which means creating a loss of 7 rupees for every unit that it transfers internally, and therefore I will not recommend household division transferring the goods to what? Internal receiving division, that is electrical division, at a price of 18. That will be your answer. And you can substantiate whatever the sentence that I have told you. You can even try to elongate this so that you will justify what? 5 marks. So let's go to the second one. Look at the second question, guys. Analyze whether it would be beneficial to the company as a whole. This is very important. Company as a whole, the supply of switches to household division at a unit price of 18 by electrical division. Earlier, we have thought only from supply division's point of view. We have not thought from the company as a whole. But the second question he is asking you is very clear. He is asking you to think from the company's point of view. So don't think from supply division's point of view. Don't think from receiving division's point of view. You have to think from whose point of view? Company's point of view. So let's see what's going to happen, how to answer this particular part. So let's start answering. Right, Anna, see it. Look at the second part. So if you look at company, just take company as a whole. Just a second, guys, so small technical glitches, don't mind. So let's take company as a whole. Right. So what's going to happen? You have two things. You think from company's point of view. You forget about supply division, forget about receiving division for the moment. You think only from company's point of view. You have only two choices. The first choice is you can sell externally. Right, guys? You can sell externally. The second point is you can internally transfer and sell as a finished good, isn't it? Either you can sell from supply division to the external market, or you can internally transfer and then sell it as a finished good. If you sell externally, think from company's point of view. What is the cost for the company? 16 rupees, isn't it? What is the selling price for the company? 25. So the company will be ultimately earning how much? 9 rupees. If you let the supply division as a company to sell it at its external market, in that case, your cost will be 16 and your selling price will be how much? 25. So the company will be earning how much? 9 rupees from company's point of view. Whereas, now you try to see what's going to happen if it is internally transferred and sold. Very simple. If it is internally transferred, for company, the internal transfer price cost will be how much? 16 only from company. So all this profit should be eliminated, because I'm thinking from company's point of view. This is one thing if you internally transfer, because you have already spent 16 rupees from company's point of view. That is intermediate product purchase cost. Then in addition to that, you have to spend 50. The receiving division is spending 50. In addition to that, you need to spend 40. I'm not going to take fixed cost, because fixed cost is what? Irrelevant for taking what? Decisions. And in that case, your total cost will be 106. and you will be selling it for 130, which means your profit will be how much? 24 rupees. You got the point? So as a company, you have two choices. Should I sell my intermediate product as an intermediate product to the external market, or should I internally transfer my intermediate product to the receiving division, and after that I have to sell it as a finished product to the external market? In the first choice, the company as a whole is going to earn 9 rupees. In the second choice, the company as a whole is going to earn how much? 24 rupees. So as a company, from your company's point of view as a whole, would you like to earn 9 or 24? 24 obviously. So your answer from company's point of view will be, it should be transferred internally. So that will be your answer. You got this, guys? Okay, chalo. Let's move on to the next one. Now, what is the next question, guys, that he has asked? Do you feel that the divisional manager should accept the internal divisional transfers in principle? If yes, what should be the range of TP? Okay. Now he has asked you range of transfer price. Now always range means, remember, there will be minimum transfer price and there will be maximum transfer price. That's why you call it as a range. So minimum transfer price, remember, always you should think from supplying division's point of view. This keep it in mind. Whenever you are trying to fix a minimum transfer price, you should think from supplying division's point of view. Why? Because supplying division is the one who has spent money, it has spent variable cost in order to manufacture that particular good, and transfer price for the supplying division will be what? Revenue. Therefore, if I am the one, let's take the scenario here. I am supplying division, I have spent how much? 16 rupees. So when you are fixing minimum TP, ensure that you fix that minimum TP more than the cost which I have spent. I have spent 16 rupees. So you ensure that you keep the TP more than 16 such that I will be getting something more than what I have spent. Otherwise, I will not be accepting. So suppose if minimum TP is less than the variable cost, let's say the minimum TP is 15. Will I accept as a supplying division? No, because I've spent 16 rupees here. If you give 15, it's not going to work for me. So you ensure that your TP that you're trying to fix should be minimum greater than what? 16, so that I'm at least a little bit happy because I should be recovering more than what I've spent. It's as simple as that. Whereas when you're trying to fix maximum TP, you should always think from receiving division's point of view. Why? Because receiving division is the one who is buying it. So when you're trying to fix maximum TP, you should ensure that whatever the maximum TP that you are going to fix, that much of money is available with the receiving division. Suppose as a receiving division, I've got 30 rupees with me. That is the money that I've got in my pocket. Just imagine, okay, just imagine. Then if you fix the maximum TP as 32, will the receiving division accept? No. It will say that, array yaar, I have got only 30 rupees with me, and if you fix the TP as 32, I can't buy, so get lost. Are you able to get me? So which means whenever you fix minimum TP, think from supplying division's point of view. Whenever you fix maximum TP, think from receiving division's point of view. See what the minimum that supplying division has spent, and your TP must be more than that, and see what is the money that receiving division possesses, and your TP must be less than that, so that the receiving division can buy. Now, if you look at this case, obviously the minimum TP is 16, which is nothing but variable cost, because that is what it has spent. Forget about fixed cost. Unless fixed cost is changing, it is irrelevant. If it changes, then it is relevant. Okay, in this question, fixed cost is constant, so it is irrelevant. Coming on to maximum TP, it's pretty simple. What is the ultimate final good selling price that receiving division is selling? 130. It sells to the outside market at 130. Its own cost, we generally call it as further processing cost. That is the own cost of receiving division. Own cost of receiving division. How much is that? It spends 50 rupees and 40 rupees. Right, Nana? So which means ultimately it is left over with how much rupees in its pockets? 40. I did not reduce 18 rupees because 18 rupees is the intermediate product purchase cost. We are trying to fix TP only. TP is nothing but intermediate product purchase cost. So you should not be reducing that. You got it? So ultimately how much money is left over in the receiving division's pockets? You can imagine 40. How much is the money that has been spent by supplying division? 16. So you ensure that your TP is greater than this number and less than this number, which means your answer will be 16 is less than, TP is less than 40. This will be your answer. Got the point, guys? And I hope it is clear. Right. Let's move on to the next one. So what is the next question, Nana? And the last one. Yeah. Okay. Suggest the steps to be taken by the chief executive of the company to change. Okay. Suggest the steps taken by the chief executive of the company to change the attitude of the divisional heads if they are against the internal divisional transfers. Okay. See, there are two concepts. One is goal conflict, the other one is goal congruence. Goal congruence means ultimately the company or the head office, you imagine either way, has given divisional autonomy to these divisions such that they feel that it's their own company, each and every divisional managers, and they take care of their particular work. Are you able to get me? Right? So, they will feel their respective divisions as their own. Are you able to get me? So, when they feel their respective divisions as their own, they will really perform with higher level of efficiency, and as a result, what happens? Definitely, the company as a whole will be earning more profits. So, when the decisions of the individual divisions are aligned with the interest of the company or the head office, then you say that goal congruence is achieved. But when the decisions of the individual divisions are against the interest of the company, then you say that there is a goal conflict. Now here, as you can see, this particular chief executive is actually willing to take a decision such that how to make these divisional heads such that they go for what? Internal transfer. The answer is very simple. There are two answers that I can give. Okay, let's go with those answers. The first answer that I can say is, this is the fourth part. Head office, let head office take the powers, let it centralize the decision to fix TP. So what head office should do is that you don't let the power of fixing transfer price to the individual divisions. You better keep the power with yourself, so that you fix the TP and the divisional heads, they just need to follow. In that case, this problem will be solved. Anyway, I don't really think this would be an answer which the examination would get impressed by, but this second answer is the most important one. The second solution is you fix dual rate transfer pricing system. What do you mean by fixing dual rate transfer pricing system? It's pretty simple. The supplying division will record in its books TP is equal to variable cost plus some profit margin. The receiving division in its books, it will record the TP as only marginal cost. So which means, let's say the TP is 16. I mean, the 16 is the variable cost that is spent by the supplying division. In supplying division, in its books, it will fix TP as 16 plus, let's say 4 rupees, which means it will fix the TP as 20. So in supplying division's books, the revenue will be 20 and the cost will be 16, and the supplying division will have profit of 4. So supplying division is happy. But at the same time, when it comes to receiving division, what happens is that receiving division will fix that TP because it's a cost for the receiving division, right? It's intermediate product purchase cost. So receiving division will fix TP in its own books as 16 rupees only. So as a result, its profit will increase and supplying division's profit also will increase. So both of them are happy. In that case, this particular problem can be solved. So this is the point that you really need to understand. Okay, guys. Right. So I hope you have understood the first question. So I'm really happy with that. So what I'll do is that I'll try to finish off this video here, and then I'll try to make up another video, another 2 parts of video where I'll try to explain you the answers of remaining questions, such that let's try to make the video crisp and short so that people who are not having time, they'll be happy. So that I'll try to make this video into 3 parts or 4 parts so that you'll be able to enjoy the video, right guys? I hope you have enjoyed this analysis of the first question, which is for 20 marks and it is compulsory. As you can see, it's comparatively easy, but of course you have to explain it by writing few sentences. Are you able to get me? Right. If you really like this video and my effort, then please like it, and then give a comment over here what you feel, and subscribe to my channel, so that really motivates me in a positive way, and I'll be happy. Right guys? Thank you so much. Jai Hind.